Yo, what's going on, gang? It's your boy Chike Investing back here with another YouTube video. We are here on the daily NQES review series. Today we're going to be talking about a very special video, right? I've done a couple of these before, but I want to make sure that you get something really out of this video when it comes to this type of daily profile. This is what we call how to anticipate, intraday large moves, right? So when are we going to expand in one direction? What are some key tips and how you can understand that? And then secondly, after you've made that large move, how do you know when there's going to be a reversal? Okay, so this is going to be very insightful. I'm going to be going from the daily down to the 1 minute because you need to understand higher time frame bias. We're going to understand pockets of liquidity, right, as well as time of day, right? Also, on this channel, we trade the flagship model on this channel is the ICT 2022 model. Now, this model is the only model that ICT said that he would actually teach his daughter, right? Because it's that simple, right? So we're going to be going over that. Make sure you stay tuned and you stay involved. And without further ado, let's get into it. I'm not trying to spend too much time on this, okay? So we're also going to go over opportunities where you could have made money. But if this sounds very interesting to you so far, press that like button. If you like the video, that's what it's for. Thank you so much for pressing that like button. You're a really great person for that. Press the subscription button as well. Thank you. And press that notification bell because you don't want to miss a single video. Neither would I. So I appreciate y'all. And let's get into it. Also, I have a free Discord below as well, where I go over, live review of what I think the market's going to do in the morning, daily bias, as well as going over trade recaps of particular trades I took. You don't have to wait till the end of the day for the video. Okay, now you can ask me direct questions and interact with me there. Now let's go over it. So here on the daily profile, we ended up taking out the previous day low, right? After reacting off of the lower half of this daily CB. Now, what do I say on this channel? Right, when you are closing in the lower half of a fair value gap or any PD array for that matter, and you start to reject away from it, that are signs of bearishness. So because we were closing in the lower half of the daily CB, and during the AM session, when we started expanding downwards, that was one of the factors that made me to think that we could probably have a downward day where we expand pretty aggressively because we are on a daily profile reacting under the lower half of the SIBI. So that could tell you that price could, on a daily candle is probably going to reject the red pretty aggressively, especially because we're not even in the, upper half quadrant of the lower half, right? Like we're below the 25th percentile of this FVG. That is really bearish, right? Closing in that and rejecting away. So you have a pretty expensive day downwards, right? Where we took out the previous day low, all right? One thing to note is that ES has, expanded above its SIBIs, right? And so we're actually inverting this daily SIBI. So, long run, I'd still like to see price, at least reach up to higher levels. And even though we're having a short-term retracement, but who knows? This could be an SMT with the bodies of ES versus NQ. So over time, we'll have to see kind of what's going on there and how we continue to motion. If we can close through this daily CB and continue lower, I could see us taking out this LRRs over here, LRRs down here, and eventually have some of that retracement after a large move going at the end of the year. But we still have these LRRs above here on the daily, so that is something that we could look at as well. So we just have to kind of see how we interact with these fair value gaps. Can NQ catch up with ES, or are we going to reject away and form that SMT? Those are two things I'm going to be looking at. But that's not what we're studying today. We're going over key things on these time frames. So on 4 hour, this is where you start to see this new week opening gap, right? a lot more clearly. Now, key PD arrays we'll go over. Overnight, all right. So this is where we started basically from yesterday's Asian session all the way to today. We mohawked above the consequent encroachment of this 4 hour CIBI. Right. So I say on this channel that if you close through the consequent encroachment, I want to see the next candle expand higher to really see that we are going to invert this 4 hour CIBI. But if we are closing above the consequent encroachment and the next candle comes through it back down, that is really a mohawk. And you can anticipate the next couple of candles to actually, reject in the opposite direction. A lot of times that is a very probable outcome. Right. And this happens even when you're closing outside of the PD array as well. Right. You want to see if this is really bullish and we're going to close and invert this 4 hour CB. If we close above the consequent encroachment, it needs to go higher. We failed to take out the previous day high, failed to take out the Asian high as well, and just continue to expand lower through London as well as AM and PM session, and taking out the previous day low and taking out this London low from last Friday on the 4 hour ultimately. Okay, and then hitting this rejection block over here, or really just coming down to this bullish order block right here. on the 4-hour, and rejected higher back into, above this low, all right, above the previous day low. All right, so how could you have anticipated that price was going to fall like this, and how could you anticipate that price was going to come back up and form this 4-hour rejection candle wick? We'll go over that in a little bit. Now, on the 1-hour, what do we see? On the 1-hour, you see we took out a PM session high yesterday during the Asian session and then broke market structure, right? Forming a 1-hour fair value gap right here, retracing into that. So this is actually what we call a 22 model. Now, what is a 22 model? 22 model is, and this is what we trade on this channel. Unfortunately, I don't trade the 1-hour, but let's just go over 22 model. You make a high, purge liquidity below this low, break of market structure above this high, fair value gap must be present, retrace back down either into the fair value gap or some discount array on this leg of price action. So it could be inversion fair value gap over here that can keep this gap open, or maybe there's a breaker right here that keeps this gap open. And we go higher. Okay. Now on the left, you could have a series of lower lows and lower highs, and we're downtrending, and then price hits a key PD array and then breaks market structure and goes higher. Or we are, trending up. We have a continuation purge below this most recent low, and then continue going higher and going to market structure. And how you want to know when a 22 model is really valid is you must have a bias that price is going in some sort of direction. And that's why I always start off these videos with what's happening on higher time frames, so that you can have a bias of where price is likely to go, where are the liquidity pools, so that when we go on lower time frames and see these 22 models lining up, you'll understand why those were valid and why certain ones were not. Okay, so without further ado, let's continue here. So this is the 22 model on the 1-hour, right? So we have this high here, low, higher high, break of market structure lower, fair value gap present. Okay, we retrace back into those fair value gaps, which is actually also reacting off of this 4-hour SIBI level, right? Fair value gap SIBI. So we're reacting from a key PD array, right? So like I said before, right? So we have a series of trend higher up. When we're trending higher, if you want to think a 22 model is valid and we can retrace some of this move, you want to be reacting from a PD array pricing to get to where its final destination is. So this final destination here was this 4-hour SIBI that we got to, forms a 22 model, and price breaks down, forming another SIBI during the London session. That price ends up manipulating in the AM, and coming back. So in London, we have this London leg manipulation and then continuation downwards. And then in the AM session, how do you know that we can have a bearish day? This is a, manipulation in the AM and a continuation of London's move, right? So this is also a daily profile that you can see that actually could also lead to bearish action. So this is also telling you why bias today would have been bearish. We have all this liquidity below here, right? So this is the PM low from yesterday. This is the London low for today, as well as pre-market low as well here, that were all intact. Now we had the London high and Asian high, but because of these 22 models and the formation that we're having and our reaction off this 4-hour SIBI, we don't need to take out those highs. The liquidity is below these relative equal lows back here, right? We've already taken out this high right here, these pairs of highs. So over here is jagged. It's a lot smoother down here, okay? And then when you see price expanding like this heavily, I mean, where are we going, right? You have to ask yourself that. So at this point, we have this low below here. We have this previous day low that we ended up continuing to expand to, and we ended up taking out this 4-hour low by about noon, and then came back into the range, forming a 1-hour fair value gap, and then retracing that into that at 3 p.m., and then, kind of going a bit higher. All right. Okay, on the 15-minute, let's go over this real quick. On the 15-minute, consolidation, mostly yesterday and overnight, and then price comes back up, has the manipulation leg going into the pre 930, right? Taking out this high, coming back into this 1-hour fair value gap, reacting off of this 1-hour fair value gap consequent encroachment. You can see that, right? That's a very bearish signal when you see that we're resisting at that exact level. Very bearish signal. You can see at 9:30, we open and we just expand away. Now, a lot of times when you see this opening range gap and you already have a bearish bias and you're seeing bearish price action prior to the 9:30 open, you can see this 9:30 open gap stay open, especially if we just expand away from it immediately, right? Now, we have obvious targets below, right? And there's more targets below as well. If this opening range gap stays open, we can anticipate that the rest of the morning session will definitely be bearish, right? And very bearish for that matter, right? So ICT says if there is an opening range gap that stays open and there's little reason to return back to it, it is going to be a bearish day. Now, this is the number one reason why, in my opinion, you could have anticipated with a lot of certainty, on top of everything else that happened, that price was going to expand lower because this opening range gap refused to get even traded back into. Now, what's an opening range gap? Opening range gap is on the regular trading hours, the difference between the close of, yesterday's candle as well as and to the open of today's candle at 9:30. Right now, that gap is an inefficiency. It typically needs to get filled, and within the first 30 minutes, it'll typically return back to the constant encroachment. It did not. It expanded away. So all throughout AM session, if you caught any shorts on 1 minute, right? So when you're seeing stuff like this, like when you're seeing this kind of profile, what you want to do is wait for a short-term retracement on the 1 minute, and then catch a 22 model downwards to head towards its final target, right? And you can see that we kept going down. At 11:30, we had a pullback candle that came back into this redelivered rebalance price range, very classic of an 11:30 move, right? That's 11:30 macro, where you'll typically see a pushback against the daily range. And then if we get that at 11:30, then typically the lunch session can, either the beginning of the lunch session or going into the lunch session, we can continue. And I actually took a 22 model trade. That's where I actually caught my trade. There was one right now, 9:30 that I missed. We'll go over that as well. But I caught a trade in here heading towards the low, which is that 4-hour low over here with these relatively equal lows on the 15-minute that, I was anticipating for us to hit, coming back into this big 15-minute fair value gap. Now, how could you have anticipated that price was going to, I already told you how you can anticipate that price is going to fall, but how can you anticipate that price is going to reverse? So, how I know that price is going to, reverse or likely, first of all, you have to understand when price is falling like this, it's hard to catch a falling knife, right? If you see any 22 model longs, like I'm sure in this 15-minute reversal candle here, you'll see a long, but a good 22 model setup. But because we haven't gotten to where we need to yet, which is this 4-hour low right here and this 15-minute fair value gap that's paired with that, like we're going to keep falling. That's why you need to have a bias. You can't just buy anything because it's at a discount. You need to know where are we going, right? So we finally get to where we're going. And then price taps that. This is the last, pool of liquidity that I would like to have seen us get to. Then price creates this 15-minute rejection candle closing above that low, right? And, forming a 15-minute bullish order block. I'm thinking, we're probably going to be reversing back into some of that range, at least probably coming back into equilibrium at some point, right? Let's see if we even got back to equilibrium of this range. Yeah, so you see we came back exactly to just equilibrium, right? And closed around there and gyrated for the rest of the afternoon. So let's just keep that. Let's just keep those levels on here so we can see that. Extend the lines to the right so that you can see how we interact with that as we go into lower time frames. But hopefully this is making sense so far. Remember, if you're learning, press that like button, and join the Discord below where I talk about all these things before they happen, as well as go over live trade recaps, and subscribe. Press that notification bell so you don't miss any of these videos. Okay, so on the 5-minute here, we have some consolidation pre 9:30 session, but we're still respecting premium arrays, leaving a lot of liquidity below here. Price expands lower, has an institutional order flow entry drill around 9:45 a.m., getting into that 9:50 macro, expands lower, takes out this low, and takes out a key pool of liquidity on this low right here, right? Goes lower, institutional order flow entry drill into this fair value gap as well, validating the fact that this opening range gap is really telling us it's going to be a super bearish day until we get to where our final targets are. We finally get there around 12:10, but you see at 11:30 we had that pullback taking out a key high over here, right? And then we tapped the previous day low, come back lower, and then starting from 12:10, all into the 1 o'clock, 2 o'clock session, we start reversing, come back to equilibrium of that range, and then by about 3 o'clock we are just gyrating around. Once you get there, that's our last target. You just gyrate. So a lot of times, like when you are going towards a target, if you don't reject immediately in social media, like for example, like how do I know we're going to just start consolidating for the rest of the afternoon? Well, first of all, the afternoon is going to consolidate if we had a really large AM session. That's just facts. If you had a really large AM session and you didn't consolidate over over lunch, right? Like the PM session is typically going to consolidate, right? If you just moved all AM and then you also moved lunch, there was no consolidation in lunchtime, like PM is going to be trash. And we've hit our target, which is equilibrium. We need to at least come back to equilibrium to offer fair pricing, right? Because we've gone down so much, right? Like we're just too cheap down here. We need to come back to a premium level, which we did. Right here, we're just dipping back into equilibrium level. Now, you've hit all your major targets below here, and you've had your V-shaped recovery already, going back to equilibrium. AM and lunch session were already very active. Just close your charts, bro. Like you're done. Like think about how many moves you're going to get in a single day. Like you're done for the day, okay? Where's the valid 22 model? So we know that equilibrium is likely to get hit too, right? So we have this low right here that gets taken out by this low. Break of market structure happens over here above this high. and plus you have this fair value gap. So what is a very valid 22 model? If I hadn't caught my short in this move right here on the 1 minute, which I'll go over in a second, you could have taken this. So you have this fair value gap, you have this breaker candle, and you have this BPR inversion fair value gap. You can keep below those 3 PDRAs and aim for a 1.5, right? 1.5 right there and get your short entry. If you want to be really risky, maybe you can get like a 1 to 2-ish if you place it just below the breaker, because there's a fair value gap right here. So this is what you call a unicorn model, where if you have a breaker that is nested with a fair value gap, it should not go below that. So you can set your stop loss right there as well and aim for a 1 to 2. But you know typically I like to at least get 1 to 3s, just the way that my accuracy is, and how I can build my account over time. Now let's go over 2 quick 22 models on the 1 minute. I don't want to spend too much time here. There's a really nice 22 model right at the 9:30 open, right? So I'm going to go over this. So I highly discourage against taking 22 models at the 9:30 open if you're not experienced, right? They can be very volatile at the 9:30 open. Look at this large candle, right? If that was in the opposite direction, where sometimes you can have a Judas swing. Sometimes like the 9:30 open won't just go in the direction of where you're anticipating for the morning. A lot of times it'll come back, fill the constant encroachment level, and then go in the opposite direction. But I was anticipating that opening range gap to possibly stay open, and I'll give you guys a tip why. Now let's get into smaller time frames here. So remember, we are already bearish. Okay, I wanted to see shorts going into the AM because of everything I highlighted on the higher time frame. Feel free to replay the video if you want to go back and check. And right before the 9:30 open, a lot of times you'll see a good 22 model form if we're going to use that 9:30 open to expand in the direction of where we want to go to for that day, right? So we had this short-term purge on liquidity here, right here, at this 9:26 AM candle above this candle's high, forming a 22 model high right here, higher high, breaking down below this low right here, forming a fair value gap in the process. We trace back into that fair value gap and expand lower. Now, at the 9:30 candle, unfortunately, this fair value gap forms right at that 9:30 candle, right? So this fair value gap didn't exist until 9:30, and I had my entry at this fair value gap. Now, I should have anticipated really that there was going to be a fair value gap formation, knowing that we were going to close a couple seconds here going into 9:30. So what could I have done differently? Once that candle closed, quickly, either execute via market and have my stop above here, right? And aim for your 1 to 3, right? If you have other areas, I would have aimed for this for a nice 1 to 3 immediately. You would see that we've gotten that on this candle right here, literally in 1 minute. Fastest 22 model probably ever that I've ever seen. Really, really fast volatile action right there. And the reason, again, why I would have taken this short is because I already was like bearish, and there were clear targets below that I was anticipating the 9:30 open to utilize to take this out. Plus, we had this short-term break with purging liquidity and break of market structure right before the 9:30 open. It's like, think about sometimes, like if you see this happening before news as well, the news will typically use this profile to go to kickstart and to have a very, very fast reaction off of where you want to go, or of where you like the 22 model forming. Okay, so after that happens, price forms another 22 model right here with this high, low, higher high over it. This high right here, fair value gap forms right here. You don't make it back to that fair value gap, but because we closed well below this wick and well below this breaker candle right here, I would have entered at the low and then set my stop loss above here, this candle, this breaker candle. But we took out a key low over here, and at this point, I wasn't sure we we're gonna hit the previous day low. To be honest, I actually wanted to see these equal lows get taken out and then come back higher and take out these LRRs, and the LRRs are here. So once we hit that first objective and we had this large move in the beginning, I was like, all right, the day before Thanksgiving, I'm not gonna be super aggressive, and I'm not 100% sure that we're gonna come down low here. But when we start expanding away more and more, and we're not having a willingness to go back here in the first 30 minutes, then I'm thinking, okay, yeah, all right, we're gonna go lower. So we go lower, and at this point, you can do one of two things. Try and find a short until you get to your final target, or wait until we reverse once we get to the final target, right? Because we're definitely going to reverse and retrace some of that move in the day. So the 22 model I took is once we got to 11:30, I noticed that we retraced and took out the first couple lows, right? That were right next to us. Typically after 11:30, anytime after 11:30 going into lunch, you will see a retracement on at least taking out the first low that appears next to it after 10 a.m., right, according to ICT. or you can see us completely reverse into the daily's range. Now we had that move at 11:30, and price came back down to this previous day low, and then we had a 22 model form. So we have this high, this low right here, higher high, purges that, reacting from this previous day low. We still have these LRRs below here, and we haven't gotten to this 15-minute fair value gap and that 4-hour low yet, right? We just came short of it because we're going into that 11:30 move to purge some liquidity to continue going lower. So some people will start buying this right here. This is another 22 model, right? Low, high, lower, low, high. You're thinking this retracement could be into this fair value gap and go higher, but no, because of time of day, we had that smart retracement, but like we're not at our final targets yet. So that's why I know that this 22 model is not valid yet. You need to have a bias. 22 models can be trash if you don't have a bias. So once we break market structure lower, I'm looking for the first discount PD array I can get into. So once price expands like this volume imbalance right here, very hard to see, but that's a volume imbalance right there. Volume imbalance, right? Especially if we're really bearish, right? And we're entering that, that continuation mode, reacting off a key PD array, which is a very strong one, previous day low. Price comes back into that volume imbalance, and we expand lower and end up taking out this low, and we end up taking out the 4-hour low, and we go into that 15-minute fair value gap, which is my last point, where I took out my entry. And then we have a reversal, right? So this is when now that we've hit this 15-minute fair value gap, I'm thinking now we can find a reverse. Plus, we're entering into the lunch hour where we can kick off, going back into the daily range for real, right? And so price has this low, high, lower low, break of market structure, fair value gap right here, we enter, and then we go higher, right? Admittedly, I would have set my stop loss here, we go higher, and then, I probably would have left it here for a while. Once you start gyrating like this, I really like that. That's okay. I know we're still heading towards equilibrium. We have another 22 model form here. 1, 2, 3. Break of market structure. Fair value gaps in the way. Wait for a retrace back into, the first discount PD array, which would be this breaker right here. Which you really don't get. So honestly, I maybe not have gotten that entry. But, if you wanted to be a little bit aggressive, you could maybe enter on this candle, anticipating that this is still a valid 22 model. Even this one right here, low, high, lower, low, break of market structure, comes back and taps the high. Oh, it doesn't even touch the high of this. Yeah, price is really just drawing towards that equilibrium. But, sometimes you can enter like here on this candle or on this candle if you think that, you're still bullish as well. You don't have to wait for it to return back to the discount array, but that's just the best entry. Price ends up getting to that equilibrium level and it falls off in precision for us of the day. So yeah, that is today's review. Hopefully this was helpful. Make sure you press that like button, subscribe, and I'll catch you guys in the next video.